Hello, Maverick traders. This is Rob Reinhold. This is the Currency Recap, February 28th. This is the last day of the month, so we close our books. We'll have payouts on Thursday, and then we go look towards March. So we're really coming into March here on a really weak note in the markets. Today we had the S&P fall 0.3%, VT, crypto down 1.3. Okay, look, these weren't big falls. However, if you take a look at the charts, and we're going to do that in a second, you can see that the equities failed another bounce at the 50 MA. This is the fourth or fifth failed daily candle at the 50 MA. When something fails to bounce this many times, it tells you it's not going to bounce. We got the Chicago PMI was much weaker than expected, and we had the euro and pound strong in the middle of the day and then fell apart at the end of the day. If we take a look at these charts, take a look at what I really wanted to point out. We have been seeing some extreme, really bad moves here. Let's go back to last Thursday. This was a candle that said, okay, we talked about this. It wasn't a great candle, but it was an okay candle. And then we gap down, we recover, but then here we bounce, we fail. Here we bounce, we fail. These are lousy, lousy candles. You are supposed to have a V bottom when you reach support. We are not getting that. And look at this candle today. I'm telling you, this is a good signal that we are going lower. So we think we are looking at a risk off move here over the remainder of the week. We were at a -1. We're getting really close to going to a -2. Here is the world index of equities. As you can see, it looks lousy as well. We go on to cryptos, and cryptos are just simply sideways. We are in the middle of the range, so cryptos, you definitely can't say they're a buy here, but you also really can't say that they're a real definitive sell. Cryptos are pretty much in the middle. If you look at the daily performance today, cryptos had a down day. Bitcoin Cash was the worst. We're going to take a look at a chart on Bitcoin Cash. It looks really bad. Everything else looks sideways at this point in crypto. In Forex, we had the Kiwi is the best today. Why was the Kiwi the best today? I have no idea. It just was. Sometimes you don't get all the answers to your questions. But we saw the dollar was the second strongest currency. We've been talking about buying dollar on any pullbacks and high bases. And we think that is continuing to be the play here. Swiss franc, euro, and pound all were up in the European session, and they all gave it back. We'll take a look at the charts. Really bad price action. And we talked about over the weekend the dollar and the CAD being correlated and moving together. Today, they did not. We got weaker than expected GDP out of Canada, and I think you can count on that correlation being broken between dollar and CAD. So if we take a look at our market outlook, we are at a -1 right now, but I'm telling you, in 12 to 24 more hours, we could easily go to a -2, and I think that's exactly what we're going to get. The candles that we saw were really lousy over the last 5 days. Tells me we're going lower. So right now, we can't get super bearish, but it is time to start getting prepared for that bearish move. That's another reason why we do like the dollar to the long side. Let's talk about what's happening over the next 24 hours. So we looked at Canada GDP, weaker than expected. US manufacturing, weaker than expected. Consumer confidence, weaker than expected. Now look, this has been good news for the economy because it means the Fed's going to lay off. We got really hot inflation numbers. So here we are getting deteriorating economic numbers while inflation numbers are getting hotter. This is the worst combination for the market. We will get Aussie CPI and GDP. So if you are trading Aussie tonight, make sure you are aware of these. Wednesday morning ISM is a big number, and followed by Friday US ISM as well. Other than that, that's really all that's on the schedule. So let's take a look at these currencies. Let's take a look at them one by one, and let's give them all a score for the next 24 hours. Here I am on a 4-hour chart with our velocity score indicators in, and you can see EMA is moving flat, parabolic SAR is pretty much flat, RSI flat to a little bit negative. So this is Bitcoin. Bitcoin is a good solid -1, but when we come over and take a look at Bitcoin Cash, we can see we are at this support line and actually looking to break through it. EMA is moving lower, parabolic SAR is starting to move lower, RSI is getting down into that high 30s area. So we think Bitcoin Cash is the worst of the cryptos at this point. Ethereum, this is neutral. As you can see, we're just going sideways. Litecoin, same thing. We are simply going sideways. We don't like the cryptos at this point. Overall, they're in a sideways trend, which means there's really no reason at all to look at buying things on at least a swing trading basis. Let's get into the Forex, because Forex is much more interesting here. This is the dollar. Now, we've been talking about the dollar being in a pretty long-term uptrend here off its bottom, and we've been saying buy pullbacks, buy bases, buy pullbacks, buy bases. So you can see here, we got a base here. You wanted to buy that breakout. We got a pullback here. You wanted to buy that pullback. You wanted to buy this little pullback here. All right, so that little pullback didn't quite work, but you can see here, we are starting to set up for a nice bull flag pattern here, breakout to the upside. I like dollar. Dollar's just there. It's not at a you can buy it now point. I want to see it break up above this parabolic SAR at 122. Again, this is the dollar basket. We'll take a look at individual ones, but get above this parabolic SAR, and I'm definitely excited to go more long dollar here. Here's the yen. Okay, the yen looks like it is, again, trending down. We've had this bounce up. If we do get more risk-off movement, it'll probably pull the yen up. So I don't really love the yen long because I love the dollar much better. And I don't really love the yen short here as well because I do think we are going into a risk-off move. So let's see if we can find something else that looks like a better short. Here is euro. And you can see euro is simply, it had a run. We're having a pullback. Everything's flat here on euro. Until we get some good confirmation that we are going to be moving somewhere, if we can get a couple more candles off of the support line, sure, then I can look at being a little bit more aggressive on euro. But until then, I think dollar is the play. Swiss franc on a 4-hour chart. You can see this is where some weakness is. We got some real weakness in Swiss franc. When we take a look here, we've had a nice uptrend. We topped out. Then you can see we just have a very nice downtrend starting here with a confirmation breaking down below these last two lows. At this point, look, Swiss franc has had a move. It's had about a 100 pip drop. We don't want to chase these. We want to let them either bounce or base before we get into them. But Swiss franc is high on my list to go short. Pound has simply pulled back. That's a nasty pullback, but it was off a new swing high. I'm going to put the euro and the pound in the same basket, that they're just cooling off from their last little runs. We talked on the weekend about the CAD really kind of keeping up with the dollar, and we even looked at the daily chart, and we said, look at this CAD. You know, it's been low basing for a long time, but we're starting to push our way out of the top of these levels. Today's candle did not help the case that the CAD is wanting to move higher. It looks like it wants to go back down into this range. I think if you are looking for something to short, I think CAD is on the higher end of the list. With that being said, I'm going to come over here to the Aussie. And this is where we liked the best short candidate this week, the Aussie. The Aussie is simply low basing here. We had a big fall last week. We are just expecting this to base. We want to be taking a look and being watching Aussie, especially with the news coming out with the CPI and the GDP. But a breakdown on Aussie is a green light to go short Aussie. And then we take a look at the Kiwi, and the Kiwi is telling us we don't really know what's going on with you. You reach lows, you bounce up, you reach highs. At best, this thing is range bound. At best. I have no idea where this is going, so whenever I have no idea, I say I'll go play somewhere else until I can get a better idea of where you're going. So let's take a look at how these all stack up on our velocity score. We like dollar and yen the best over the next 24 hours, but you can see they're not giving us a +2 yet. We need a little bit more movement, a little bit more strength to them, then they can go to +2. So these are the two currencies I'm looking at, but really I'm only looking at dollar. Dollar is the only thing I'm looking at over the next 24 hours. On the bearish side, Aussie and CAD are ready to go, so that's an easy pairing. I'm taking a look at Aussie dollar short, and I'm taking a look at dollar CAD long. So let's go take a look at those right now. Here we are with Aussie dollar short. Now this is a 4-hour chart. I'm going to come down to a 1-hour chart to where you can really take a look at some good entry points here. As you can see, we have been low basing. We have been low basing here on Aussie dollar really for the last 2 days. We've got a couple major points here. If we take a look at the absolute bottom of this low base here, It's at 67.05 or 67 to 67.05, somewhere in here. So the big question is, okay, do we want to wait for this breakdown, or is there a little bit of an opportunity to get into a rally inside of this and prepare for the potential breakdown? I think it really depends on your time frame. If you're looking to get in and out of a trade where you're only in it for a couple hours, then I think you have to wait to 67.05. 67.05 would be the point where I put my alert, and I would want to have an order sitting there right below 67 to catch this short. If you're willing to wait a little bit, then I think, yeah, you can get in on a little rally here. So as you can see, we've had a couple little rallies in this low base. Here was one, here was another one. They ultimately didn't break down, but any little rally here on Aussie dollar, I want to be a seller, because eventually my call is we do break out of the bottom of this range and we actually make another move down to the next level. Also, I wanted to take a look at dollar CAD. So dollar CAD long. So here we are on an hourly chart, and you can see we've got some pretty major resistance up here. So this is going to be the point where I say, hey, I need to see this being able to move out of this area. At this point, we just had a move from 135.6 up to 136.4. Okay, that is a good 0.6, 0.7% move. I need to see it back off. What I would love to see, and we talked about this over the weekend, talking about if I could script out a trade, if I could script out the perfect trade here on this, my trade would be that we base for the next 24 hours, gather some steam, and then break out of 136.5. See, I don't want to buy a breakout right here, right now, because it's already spent a lot of gas to get all the way back up to this level, and it may be just out of gas for a little bit. So I want this to just take a pause, gather some energy over the next 12, 24, 36 hours, then a breakout. 136.50, I think, is the point. You want to have an alert out there, make sure that you're watching, and if we've gathered enough energy, dollar CAD long at 136.50 will be the play here. And I think you've got a couple days for a potential run on this. That wraps up this recap. To conclude, equities discount bounce, which means a breakdown is likely. We like dollar here. And really, there's really not much else out there we like. We just like dollar here on pullbacks and basis. We talked about this not being a fantastic week for trading. I think it's still not a fantastic week. I think you want to be looking to be very selective, trade a little bit less than normal. Let's let the markets kind of freak out a little bit. If we do get that breakdown in the SPX that I thought and a spike in the VIX, then we can become more active. But right here, right now, we've got to be patient for that. So trade a little bit less this week. Potentially next week could be a much better trading opportunity. That is the market recap. Thank you so much for joining me. Goodbye, everyone.